0.7%. That's straight gains, mostly across all three of the big major averages. So the pullback today doesn't even do enough to begin to describe. Look at that. Look how that team, for our radio audience, our team just pulls up the chart, Caroline, the minute we hint at these monthly gains.
Yeah, April, the best since November. We're seeing the S&P 500 post more than 5% higher on the month. We're seeing the Nasdaq pull up 5% higher on the month. The Russell 2000 up 2% on the month. But today, as we are 10 seconds to that settlement, we are lower across the board. You see the Nasdaq, one of your key underperformers, off by 0.9%. Remember, we had Twitter's numbers looking ugly, pulling that particular stock lower. We're off by 117 points thereabouts on the Nasdaq. The S&P 500 off by 0.7%. That's 30 points lower on the day. Even though we get calls, of course, to see this index go higher for the year, Dow Jones off by 0.5%, 181 points lower. And let's take it out to the Russell 2000. This is where your underperformance came. Every industry group on the Russell 2000, your small caps, led lower by the likes of energy tech. We closed that lower by more than a percentage point.
Carolina, I do wonder, too, what it says that when you look at the week overall for the major averages, the Dow down about 0.5%, the S&P call it flat or unchanged, as Taylor likes to say, NASDAQ down about 0.4%, despite the gyrations, despite the big tech names, despite all of the big earnings and some big moves in some of those players, we are essentially little change for the week overall. I think that's very telling about investor sentiment right now.
Carol, huge correction. It is not unchanged. It is unch.
I can't say it. That's your word.
Unch is the word.
It's your word. I can't do it. I can't do it.
Oh, I just love doing corrections. You're killing it. Let's come over and take a look at some of the sector levels. For our radio audience, you have auto components that are up almost 4%. This is likes of Tesla and Ford, a major sort of forecast for the outlook that was cut a few days ago. Perhaps that's the buying opportunity for jumps today. Everything else for our radio audience looks pretty defensive, with the utilities and real estate, some of those big bond proxies that are up about 0.7%. We migrate lower, and unfortunately, it is mostly red on the screen. We go to the bottom of the screen, and again, technology is off almost 2%. Semiconductor and equipment off about 2.6%. Caroline, a lot of this, of course, Skyworks and Cirrus Logic, Carol, as you mentioned yesterday, some of these big Apple suppliers, but, well, they're hinting that the bad news, it may not be over just yet.
All right, I know our producers are going to be mad at me because they're like, don't pick names that are going to change and be in the red. But listen, Amazon hit an intraday record today. It was up to about 2.4% at its highs. It had a blowout quarter, folks. We broke it down yesterday. Nonetheless, by the end of the day, down about 0.1%. Got to mention Tesla. Reported, of course, Monday. The stock sold off on that, but it was definitely a gainer. There was some analyst research that was really looking into maybe how many vehicles that they will report. Ultimately, a little bit longer term, 1 million vehicles, and that gave some support to the market. Also, some analysis from NIO, which is a Chinese electric vehicle maker, also gaining big time in today's trade, and that might have given a little bit of support to Tesla as well. Got to mention Overstock. That's my number 4 gainer today, or number 3 gainer since Amazon was down, rallying after its first quarter EPS. Tim, beat estimates.
Well, let's talk some gainers or decliners here, Carol. After those gainers, Twitter, we've been talking about it all day since those earnings yesterday. Twitter shares absolutely plunging today, more than 15%. Sales were slow in the first 3 months of the year, but the company also gave a disappointing outlook, and that's what has investors concerned. Chevron sliding more than 3% today. The company did meet analyst estimates for the most recent quarter, but investors who wanted to see a revival of share buybacks were disappointed. We made reference to earlier those Apple suppliers, a tough day for some of those today after they reported earnings. Skyworks gets half of its revenue from Apple, down more than 8% today. Cirrus Logic sinking 16%. That company, Caroline, gets more than 90% or nearly 90% of its revenue from Apple.
And you know, Tim, what's also lower on the day? Well, basically most FX pairs versus the US dollar. Today was a story of dollar strength as we looked at that PCE number, that all-important inflation reading that actually the Fed looks at, coming in at 2.3%. That's pretty hot. Meanwhile, we also get the spending, the disposable income rising for those in America, and also we get the hawkish tones coming out of the Dallas Fed president, of course, Kaplan. Remember, he is a hawk on general, but again, it just reminds you that perhaps this is an economy that is running hot. What of then tapering talk in the future? Dollar index for our radio, our YouTube, our TV audiences up 0.7%. So dollar higher, even though it's generally been in the lower trajectory for the beginning of 2021. and that means most of your other pairs are lower. The euro off by 0.8%. Norwegian kroner, of course, affected by oil prices, also off by 1.6%. And the British pound, political risk I'm hearing of here in the UK. That's what analysts are talking about as sleaze seems to be encompassing the Prime Minister over here in the UK. Meanwhile, I'm also looking at commodities spectrum for you. WTI crude off by 2.3%. Oil, again, a narrative that is building. India, we see continuing concerns about COVID over there, and indeed, oil goes lower as dollar goes higher, as do most of the commodities. And I leave you with global bonds, Taylor. Actually, a bit of a bid for bond market. We saw a sell-off in Europe, a sell-off in Asia, maybe a bit of a search for a haven today, Taylor.
Oh, as Carol says, unch on the day.
As Taylor says, unch.
But we take a weekly look, and the story does look a little bit more volatile. Remember, we're now lower on the week. We just came off of 3 straight declining yields that we had, and so yields now actually migrate higher for the week. On the 10-year, up 7 basis points. Similar story on the 30-year yield. We were lower on yields for 5 straight weeks, now higher on the week for about 6 basis points or so. So you're seeing some of that Fed doing a very good job of walking that line, but on a weekly basis, you did start to see, Carol, some of that higher economic growth, higher growth expectations really filter in through the bond market this week.
Yeah, no doubt about it. Let's not forget, we're going to hear from Fed Chair Jay Powell on Monday. He'll be making some comments. Let's talk about, though, Taylor, you mentioned the economy and the economic data. That surge in personal income up 21.1%. We saw following a 7% decline in February, so just taking off March. But we know what's going on, Tim. It's all about stimulus payments. We heard it from the Chipotle CEO. We hear it from a lot of other CEOs that those stimulus payments are really giving some support to consumer spending and certainly to consumer income.
Yeah, it turns out when you give people money, they end up getting more money and they end up spending that money. I think it's also a big reason that we start to see comments from companies like Amazon, the company, beating expectations with its outlook for the second quarter of the year. And for the most part, earlier in the day, sending shares higher. But I also think it has to do with the idea of actually finding employees right now. It's something that we've talked a lot about and we've heard a lot about from company executives, that they're having a hard time finding employees despite the fact that there are more than 8 million people unemployed. They're pretty comfortable right now for the most part, a lot of those people.
Yeah, it's real intricacies within this labour market, of course. All important labour data coming out next week at the end. NFP numbers, non-farm payrolls, we all look to that. But also, what we look to is not only personal income and some of the inflationary pressures today, but also this week, Taylor, just big tech winning out in terms of its earnings, but not always performing that well. And also what was a key laggard on the week, when I look at the S&P 500, what dragged us lower for the 5 days, it was Infotech, technology names, some of those Apple suppliers that you've been talking about all day, really hurting on the day.
And I think we have a chart showing about 98% of companies so far. Look at it. Look how good this team is. I mentioned the word chart, and Tim, they just pulled up for our radio audience. We'll put this out on social. 90% of these companies are beating earnings expectations. Caroline really nailed it on the head when she talks about some of the big tech companies. Despite those high expectations, they crushed it. They killed it. Though some of the smaller companies, you're thinking of Twitter, for example, that we've been talking about, well, maybe sees, more headwinds ahead.
Yeah, and Pinterest, for example, as well. It's kind of a tale of 2 different types of tech companies.
Yeah.
I think a lot about brand advertising and the idea that following the January 6th attack, and we heard this from Twitter yesterday, that brand advertisers didn't really want to be actually pushing it out, pushing out their message. Whereas you have a company like Google and a company like Facebook, they can do that much more targeted advertising. It certainly benefited those companies, and we saw it play out in earnings this week.
Yeah, for the week overall, Amazon and Facebook, they were gainers. Pinterest and Twitter, not so much. All right, that's going to do it for the cross-platform coverage, our cross-platform coverage right here on Bloomberg Radio, Bloomberg Television, and YouTube. We'll see you again on Monday, same place, same time.
Happy weekend, y'all.
Smash that like, subscribe if you haven't yet.
Coverage. We are looking at
More
Amazon's
coverage.
major moves the
This
day
fine
after their
80
earnings
says.
report, record high, pulling back from it, but also some of the calls out there on the market. This is Bloomberg.
Tune in to today's Options Insight, sponsored by Think or Swim by TD Ameritrade.
Should have bought some Pellet 80.
New year, shine a light on the world of money with Greenlight, the debit card for kids. They'll learn to earn, save, and
From Bloomberg's World Headquarters in New York and from right here in London, I'm Caroline Hyde.
And I'm Joe Weisenthal.
And Romain Bostic, he's off today, but let's take a look at what he usually takes us through. The markets, we are off record highs, yields doing nothing, but the dollar, it dares to go higher, Joe.
Question is, what'd you miss?
Wow, just yesterday, we were telling you about the US strong economic recovery, the big GDP number, and well, today we've got a reminder
Smash
that
that like.
recovery globally
Subscribe if you haven't yet.
is uneven.
More
The Eurozone tipped into a
info
double-dip
news.
recession in the first quarter. And well, the data highlighting the cost of the slow COVID vaccination effort that has left the economy lagging far behind the United States. We also were reminded this week the bottlenecks in this